What's going on, everybody, and welcome back to another episode of the Trade for Yourself podcast, where my mission here is very simple. I just want to help you learn how to trade and invest in the stock market for yourself. So please make sure you please subscribe. Please make sure you watch this episode from start to finish. I promise you, you will not regret it. Please note that anything discussed in this episode is not financial advice, so please do your own research before investing into any stock. In this particular episode, we're going to talk about an ETF that just released within the last couple of weeks. And this particular ETF only has 5 stocks in it. Yes, this ETF only has 5 stocks in it. Now, this is my opinion. Depending on your risk tolerance, I believe that this particular ETF could serve as a replacement for the S&P 500, again, depending on your risk tolerance, okay? Let's get into this ETF. Let's see what these 5 stocks are, okay? Let's get into it. Okay, everybody, so the ETF that I'm referring to is ticker symbol BIGT. This is the first FAAMG ETF, which this ETF pretty much swapped out Netflix for Microsoft, and this ETF only has 5 stocks in it. That's Meta, Amazon, Alphabet, Microsoft, and Apple. Again, this ETF only has 5 stocks in it. And this is the first ETF that's ever had 5 of these particular companies in one particular ETF. So let's talk a little bit about the ETF overview. Now, this ETF was created by Roundhill Investments. Now, the Roundhill Big Tech ETF pursues its investment objective of capital appreciation by seeking exposure to between 5 and 10 companies across technology industries. Roundhill selects the underlying issuers based on market capitalization, trading volumes, and sector relevance in an attempt to identify the largest and most liquid companies representative of the technology industries. Now, let's look at the key features. The Roundhill Big Tech ETF is the first ever ETF to allocate 100% of its exposure to these particular stocks. It seeks to provide exposure to the leading technology and innovation companies in the US and the ability to express more targeted views than traditional sector and industry ETFs. It cuts out all of the fluff. We are going straight for the heavy hitters. We're going straight for the all-star team. We've got Steph, we've got LeBron, we've got Giannis, we've got KD, we've got Joker at times, we've got Embiid, we got everybody in the ETF. We are not playing around, okay? So why would you even do something like this? Because it gains specific exposure to innovation and leaders across cloud, social, artificial intelligence, and more without any filler holdings. Like I said, we're cutting out all the fluff. It's efficient. Big T seeks to contain the largest and most liquid companies. Simple. One fund that's rebalanced quarterly and reconstituted annually. Now, what are the characteristics? Is Big T is the ticker. It's on the NASDAQ exchange. The expense ratio is 0.29%, which is higher than your S&P 500 and your QQQ, but it's lower than what I would expect for a specialized ETF like this. You know, it's a specialized ETF, so it's a little bit higher than your traditional indices, but at the same time, it's lower than your specialized ETFs. Think about a stock like ARK. ARK, that expense ratio is 0.75%, which me personally, yes, it's higher, but don't get too wrapped up into the expense ratio. Okay, let's look at the particular stocks and look at the performance. Assets under management 750,000, shares outstanding 30,000, and the launch of this particular stock was 1 week ago. Okay, this stock launched on April 11th. Okay, so if you think about this, think about the portfolio characteristics. It's rebalanced quarterly. It has equal weighting. What does that mean? What does the equal weighting mean? Equal weighting means that every single one of these stocks have an equal weighting. It's not market capital. It's not a market cap ETF. It's an equal weighted ETF. A market cap ETF would be an ETF that is ranked based on the market cap. The stock with the highest market cap would have the number one weighting. The stock with the lowest market cap would have the least weighting. Okay. Underlying issuers 5. The median market capitalization in terms of the median market capitalization for these particular stocks is 1.4 trillion. So we're talking about the biggest companies in the world. Country exposure count, United States 1, United States 100%. So when you look at this particular ETF, there are many people or many investors out there in the stock market, me included, that like these particular stocks. Like I like all 5. I'm not gonna lie to you. I like all 5 for many different reasons. Okay. And it may be hard or difficult for you to pick one out of these particular 5 or 2 out of these particular 5 to hit your wagon to, if you will. If you're a technology person and you love tech, you could buy this particular ETF on 5. Okay, because look at it, like let's just be honest. Think about it. These particular 5 stocks are 20% of the S&P 500 is 20%. So you could own these 5 stocks in one basket. You don't have to pick a winner. Pick these 5 stocks in one basket and then own maybe 2 or 3 that you may believe in on the outside, and just run the play like that and just cut out all of the fluff. But again, like I said before, that's depending on your particular risk tolerance. I'm not telling you to cut the S&P 500 out or cut SPY out. That's not what I'm telling you. I'm just saying that if you're holding SPY or if you're holding QQQ because of the fact that you want exposure to these particular companies, this particular ETF is giving you an opportunity to hold these particular companies. So give it a look. I'm not telling you to buy it right now because this ETF just came out on the market, but see how it goes. Like, see how it goes, see how it moves, see how it allocates, see if people like it, and then maybe make a decision on what you want to do, maybe towards the end of the year, maybe Q3, Q4, things of that nature. But just keep your eye on it. I'm just trying to introduce you to the information and we can make a decision later on. Okay, so seriously, everybody, why would I say that this particular stock could serve as a replacement for the S&P 500? Let's face it, everybody, these 5 stocks combined make up over 20% of the entire S&P 500. I don't care what you say, I don't care what you believe. If the S&P 500 is negative, that means these stocks are going to be negative. If the S&P 500 is positive, that means these particular stocks are going to be positive. They mean too much to the market. All the institutions hold them. They have the best balance sheets. They have the best management. These particular stocks right here are the best in class, no matter what particular industry or sector you are in. Think about this for a particular second. These particular stocks, I believe, are going to continue to grow. And if you're somebody that likes tech, you may like all 5 of them. But if you like all 5 of them, it will probably be very, very difficult for you to own all 5. So what you could do is you could own this particular ETF and just cut out all the fluff. Cut out everything else, cut out everything and just own these particular 5. If there's some other technology companies that you like, maybe 2 or 3, you could pair another 2 or 3 and then you could be good. You could be fine. Just think about it from this particular perspective. Who has better management? Who has better free cash flow? Who has better cash on their balance sheet? Think about what these particular stocks are going to be. Look, the S&P 500 is probably going to look a lot different in 10 years, in 20 years, whatever you want to call it. But it's very, very hard for me to believe that these particular stocks are not going to be a part of it in some particular way. So if these are some of your favorite stocks and you believe in all of them and you've been wondering, man, I wish I could just own just these 5, you can own all these 5 just in one ETF. And then pair Tesla with it, or Nvidia with it, or AMD or Square, or whatever stock that you like, you could then pair it with this particular ETF. As always, I thank you all for tapping into another episode of the Trade for Yourself podcast. Please like, please subscribe. Make sure you hit that notification bell so you can be in the know every time I drop an episode. I want you to reach out into the comments and I want you to be objective with me. This ETF just came out. Reach out to me in the comments. Let me know if you believe these 5 stocks can continue to be successful. Let me know if you believe that this particular ETF can be successful, because I want to know your opinion. Is this a trap? Like, why would they be releasing this ETF now? I want to know your feedback so I can become a better investor, and then I can continue to provide you better information so you can be a better investor. As always, remember, don't pay for it. Trade for it. I'm going to tap in with y'all in the next episode.